I would point to four things out of the gate. When we think about trend number one, the changing global supply chains, this is causing companies to relook at their business, their activities, where they're located, and that's creating a great opportunity for us to help them and support them as they seek to change where they manufacture, sometimes move where they manufacture, or add diversity to their manufacturing. And we see this in Asia, we see this here in North America and Mexico in particular. The second trend that I mentioned is this idea of changing business models. You know, our economy is increasingly driven by what we like to think of as gig companies, marketplace companies, e-commerce companies. They have different needs than other companies, manufacturers and the like. As they develop, they're focused on their client experience or their stakeholder experience. They're focused on operational resiliency because they're making payments 24 hours a day all over the world. So the ability to support them and to support those needs is something that we're very focused on. The third trend, regulation and innovation. It's no secret that the payments ecosystem is changing as we go across the world, particularly in the area of real-time payments. And governments around the world are using payments as a way to implement public and social policy, national security policy. That is creating a lot of new tools and innovation to support that trend. And obviously we're investing heavily in that to add those capabilities and to demonstrate those capabilities to our clients. Then finally, the interest rate environment. Interest rate environment almost globally it continues. We've had, I think, 30 different interest rate moves in 15 currencies so far this year. We expect that to continue into next year. This is causing clients, to having to be more nimble, having to be more focused, having to have better information, and we obviously have the tools and are advising them on how they go about doing that. In order to fully take advantage of things like real-time payment systems, this often involves changing processes. Sometimes that's hard. We like to try and make it easy for clients to implement that. That's why we're so focused on APIs and easy integrations, but it does require change. So that's number one. Number two, with real-time payments, you have to make sure that you have all the tools to support that, which is linked to your processes, whether that be onboarding new payees, whether that be monitoring and managing those payments as they go, and we have the tools to help support clients in that regard, particularly around things like account verification and the like. I think there's some myths and some realities about cross-border payments. Everyone inextricably likes to link this issue of speed and cross-border. The reality is most cross-border payments happen quite quickly. I think the stat is somewhere like 90% of cross-border payments are completed within 20 minutes. I think that the key with cross-border payments is transparency and particularly the ability to track, monitor cross-border payments and transparency with respect to things like cost and the like. To me, the work that needs to be done, we can always improve technology. I'm not sure that's the hardest part. I think a lot of the frictions in cross-border payments are a result of differing laws, rules, and regs globally, different things like different operating hours of payment systems around the globe. So as we address those problems, some of the challenges of cross-border payments should mitigate. I think the time to prepare for volatility is actually before it happens. It is much like a credit book in the sense that when you're in a difficult environment, it's not the decisions that you're making in the moment as much as the decisions you made sometimes months, if not years before, to build a set of processes and an infrastructure to be able to manage through those volatile times. That's something we think about here at Bank of America a lot. That's why we talk so much about responsible growth, and operational resiliency, and operational excellence. I think what's critical in periods of volatility is that companies and treasurers are forecasting frequently and consistency and testing those forecasts to remain nimble. Now, in order to do that, you have to embrace data, you have to embrace information, and you have to again, be prepared to utilize that information effectively. That's why we've developed so many tools like Cash Pro Insights, Cash Pro Search, Cash Pro Forecasting, in order to allow our clients to be prepared when volatility strikes, if you will.